Hello everyone, I'm Patrick Fross with Fross and Fross Wealth Management, and welcome to our economic and market update video for the week of May 26th, 2025. Please remember that nothing said here is to be considered an official recommendation, and please read the disclosures on the email to which this video was attached. Well, today I just want to take a few minutes and talk about something making waves beneath the surface of the financial markets, and that's the US dollar, and what recent moves might mean for you and your portfolio. You've probably heard talk about the dollar weakening or headlines questioning whether or not the dollar is losing its dominance on the world stage. Well, why does this matter? Well, a strong US dollar buys more in global markets, which is great for travel and imports, but it can hurt US companies that export. A weaker dollar, on the other hand, can boost profits for those same companies, but also increase the cost of imported goods, which can be inflationary. That's why movements in the dollar matter. They touch everything from inflation to global investing. So what's been going on lately? Well, between 2020 and 2024, the U.S. trade deficit averaged about $70 billion per month. But recently, that number has jumped dramatically. For example, in December of 2024, the trade deficit was $98 billion. In January 2025, $131 billion. February, $123 billion. And March, $140 billion. That's $212 billion more than our usual sent overseas in just 4 months. So what's behind that surge? Well, we believe it was largely due to companies front-running expected tariffs, rushing to import goods ahead of new trade restrictions. That flood of dollars leaving the country naturally pressured the dollar downward, especially against the euro. Now, the good news is we see this as temporary. We expect this wave of front-loaded trade activity to ease, bringing the trade deficit back toward normal levels. And as that happens, the supply and demand imbalance in the currency market should begin to correct. In short, the dollar isn't dead, and we believe a stronger dollar will return. Now, for investors, currency moves can have real impacts. A weaker dollar can boost international investments when converted back to dollars and help U.S. exporters. A stronger dollar tends to benefit U.S. consumers and companies that rely on imports while putting pressure on overseas earnings. Well, that's why we remain diversified, balancing domestic and international holdings and staying attentive to currency trends without trying to chase them. If the dollar does rebound as we expect, that could influence how we approach global exposure, hedging strategies, and sector positioning. Yes, the dollar has seen short-term weakness, but the reasons are understandable and, in our view, temporary. We continue to monitor these shifts closely and position portfolios accordingly. In the coming weeks, we will be adding a higher allocation to international equities. We believe the international markets are poised to outperform U.S. markets, at least in the short term. Once again, this is Patrick Fross with Fross and Fross Wealth Management. Thanks for watching, and as always, thank you for your trust.